Hello everyone, welcome to my channel Inside Knowledge. I know it's been a long time, but I was really very busy. But yep, welcome back. So I'll start from where I left. So I know, like in my last video, I told you I'm going to cover three different other topics like trade recon, custody recon, and FOMO. And the last one was the basic about all those three. This one is first going to be trade recon. Now, let me tell you something. Why we need a trade recon? It's very important to understand the basics of trade recon. When I say trade recon, it means it's related to trades which is going to be reconciled. Now, when you say trades, if you're from investment banking, you must be aware of the trade life cycle, front office, middle office, back office activities. So when the trade, when I speak about the trade, that means the trade which was executed by the front office, which get passed on from middle office, then it came to settlement. Settlements settle those trades in the market, or it get STP from the front end and it settled in the market. Then it comes down to reconciliation. So that's called specific trade recon. It means you are reconciling trade piece by piece. Piece by piece, I mean to say in two parts. One is cash, one is stock. Some people say they put it like nostril reconciliation, that is for the cash, and they put reconciliation for the stock. So when someone asks you, like in your interview, sometimes people will ask you, do you know what is depot reconciliation? So it's just they're asking about the stock reconciliation. The word get changed, so that's how it sometimes make difference. Even if you're working in the stock reconciliation, but you have never heard of the depot thing, then you will get fumble like what exactly that means. But it's like it was simple: stock, depot, nostro, cash. So now trade reconciliation. What happened? What you guys normally do when trade settle? So for example, on trade date, that's what I call TD, when the trade was executed for 100 share, it means on this day front office booked a trade for 100 shares, and that's going to settle on T plus 2, trade date plus 2, that is equal to settlement date. Means T plus 2 is settlement date. So this 100 share is going to settle on settlement date. So everything will pass on in between these 2 days. 100 share will flow to settlement from middle office to settlements. Settlement will pre-match those trades with counterparty. They will agree on every economic detail of that particular 100 share. Like they will agree for SSI, that is called the settlement instruction, like what should be the PIC code, what should be the bank account, what is the where it's going to settle, like in which market is going to settle. So they will need all the detail for that 100 share, like in the SSI, and they will get confirmed by the custodian in between those 2 days. Okay, this trade is matched in the market, and they're good for settlement. They're good to get settled on the settlement date. So, for example, everything happened in between these 2 days, and pre-matched and matched and confirmed in the market. On the settlement date, it will settle. It should settle on this date. If it doesn't settle, it will fail. If it fails on settlement date, it will move on to the next day. So the one thing you have to be very sure when you're working on these settlements, it should settle on settlement date. there's a number of reasons it get failed. I'm going to cover those topic in the different my videos. Don't forget to watch all those videos, then these scenarios will be clear for you. So for example, the trade was settled on the settlement date, everything was good, no issue, then recon starts. So what we call, like in the world of reconciliation, especially for the trade reconciliation, it means on the settlement date, when the trade got settled, two parties are involved. Okay, one is A, that is me, who is sending those 100 shares. Like if you are selling those 100 shares with counterparty B, so doesn't get directly settled with them. Someone is involved in between that. So for example, if Euroclear is involved in between that, so exchange of trade happened, trade settled. For A, which is me, my reconciliation will start on SD plus 1. So it's very important to understand why SD plus 1. So on this date, on the settlement date, whatever trade was settled, the ledger and the statement which you will get, that will come next day. So reconciliation works start on SD plus 1 on the next day of the settlement. On next day on SD plus 1, for example, I sold 100 share. So how I know, like how I should reconcile? There's two teams always involved in reconciliation. One I told you, like, is for stock, one is for cash. In many places, in many organizations, they have like one single team is managing both reconciliation. But I'll take you through one by one, so you will know like how does it reconcile. So when 100 shares was sold from A to B on the settlement date, and then on this SD plus 1, what will happen? The 100 share which was sold out, for that there will be one entry, that is a ledger entry. That will normally you will know like L, or we call it ledger entry. For the internal, from the internal trade which was booked, you will get one ledger entry. This will match with one entry which will come from Euroclear, that gives you a confirmation that trade was settled. That will be always a set, as we call it, as a statement. So these two should always match, ledger with a statement, and that should be only for that 100 share. Not only the 100 share you need to check, when you're checking the statement, you need to make sure that this statement is only for this ledger, the 100 share. Sometimes you will not have much details on the statement, but when the statement comes, it will come with mostly all the details, like I think you say number of shares, number of what is the value, what was the price, what was the trade date, settlement date. Based on that, the ledger should match, and it has to match with the exact correct statement. Because if you don't match with the correct statement, if there is a mismatch between these two, for example, the statement was for some other trade, and if you're going to match these two, they're going to create a break in different account. So when they are going to create a break in between different account, that means it's going to be an issue for all the participants who are involved in between the selling and buying of those 100 shares. So it's very important, always match exact ledger with the correct statement which comes from the Euroclear or any clearing exchange. Sometimes what happen, like for example, if there's no statement for your 100 share, and you can see there's a statement which you see that's for 100 share, but couple of details are missing, like it's not matching with your ledger. That is, I'm talking about the stock, or you can call it as a depot. So when you see like in the depot reconciliation, normally what you will see, okay, 100 share, which is the internal ledger which you get from the trade which was booked at your end in your system. You'll get ledger statement you get from your clear. So 100 share you'll see for the stock reconciliation is there. Now normally mostly for 100 share we'll see the ISIN, QSIP or CDOL, and you can see trade date, value date. You can see sometimes the account number, like account number for the counterparty. So these are the details when you're reconciling the stock reconciliation. These all details should match with your ledger. You know that this trade was booked with which account and which counterparty. This is very important one. This is very crucial, like one of the very important point to note, like whenever we are matching, if these all things are matching, your detail about the account and the counterparty should always match with your ledger which is there in the statement. If your counterparty is not matching with your ledger, it means this trade is not your. This trade is related, this statement is related to some other trade with the exact same detail about the economic, but the account and counterparty or you can say SSI are not matching. When you see these kind of situation, you should always raise it to your manager or to whoever like does the deep investigation about the incorrect matching. That we normally call it incorrect matching. You should try to find out whichever system you are using, like TLM, Telematch, or there's n number of reconciliation tool there. You can search with the exact ISIN, QSIP, trade date, settlement date, and you can see how many statements you received for that 100 share, and then you can try to figure out what are the actual account and counterparty. If you see those account and counterparty and they are matched with some other trade, you need to break them. You have to manually break them. It could be possible they will match automatically, it could be incorrect matching or someone else matching, but you have to break them and you have to match the exact statement with the ledger. And when you're breaking it, you have to make sure that you match those ledger with the correct statement. You cannot leave them open. That's how we normally do in stock reconciliation. It looks very simple, but yeah, you need to keep an eye on these things and all these data that what you're getting from the statement. Sometimes if there is a delay in the statement, you need to raise it to Euroclear that hey, this trade was settled on this date, but today we didn't receive the statement. There could be a reason why, because they could be system failure, or it was not sent on time, or it could be batch run was delayed or something from the Euroclear. They will reply that okay, because over the clearing exchange, they will reply that when they're going to send the statement. But every time you will receive the statement on SD+1, that is the next day when the reconciliation start. That's how we call recon on this date. This is about the stock reconciliation. Now, when you talk about the cash reconciliation, it's not much different. It's not much complicated. It's like the same way they actually it works. So the only few things you need to be very careful is when you receive the statement, you need to make sure all these data, that means the details should match with the ledger. Sometimes you will see even if everything is matching, there is a difference in the value which is not matching with the with your ledger. The reason could be your value difference because of the commission, because of you can say sometimes partial settlement, that also happened. It could be I can say like commission partial settlement can be happen. If it is failed, like after if it was not settled on the settlement date, and you are getting your statement after 1 day, like after 2 days, then sometimes you get charged on those on the trade, and your fail cost get included, and then you get the money. That also happens, but it's very rare, because mostly the fail costs are get charged after a couple of days. So commission and the partial settlement is one of the thing which you will see. But partial settlement is a little bit different. I'll take you through that one. So sometimes commission is like $20, $30 commission was deducted and it was matched, or sometimes there was a difference of a couple of dollars, but we decided to match with the counterparties and it's settled. But when it's settled, the statement you will get that will reduce those couple of dollars, and then it doesn't match with your ledger. It happens a lot. So when you see the difference between the both the value, then what you need to do, you need to figure out, is it the correct trade which is settled in the market? If it was settled with the same value, go and check in the system what value it was settled a day before. If it was the same trade, it's settled and it's the same value, you can see the difference amount. You need to figure out what is your we have certain limit that until like $25, if there's a difference, you can match. If it goes beyond, then you need some approval, you need to justify them why there's a difference. You need to figure out why there's a difference. So if that happens, there's a difference, you need to do a little bit of research, and if it's within your limit, you can match. If it is beyond that limit, you need to reach out to your desk and to inform your trading partner, like, hey, we got a difference of this much of money. Then they can decide whether you can match this resident statement, or you need to check with the counterparty, hey, we received less money because there was a commission included, or there was a price differences because of that trade didn't settle properly. We received the less money. Then it goes beyond. Then the counterparty will work with you to fix those differences. That's the only difference between stock and the cash reconciliation. The crucial part is what happened is if there's a partial settlement. So if there's a partial settlement, instead of 100 share on settlement date, it's settled 50. And you agreed to settle those 50 share with the counterparties, so your statement you will get for the 50. Now the 50 share is still pending to settle with the counterparty. Then you need to talk to them. You need to make sure when they are going to settle this trade, remaining 50 share. In between that, you need to inform, because these things, settlements are aware of it. So you need to check with the settlement, hey, the trade was supposed to be 100, but we received 50 shares, and the value receivable for the 50 shares, then settlement will explain you, yeah, there was a partial settlement happened, that's why the 50 share we sold, and we received the value for the 50 shares. Then you can match those entries, but this trade for 100 share settlement will definitely get it fixed by the desk that we were short and we delivered only 50, or they will reach out to other desks like stock loan or anyone to borrow the 50 share and deliver it to the counterparty. But if it doesn't happen, if it happened only in partial, then you need to match those partial entries and clear your break. You cannot keep holding that, okay, tomorrow I'll get 50 shares, then I'll match both the entries with the exact value, matching them. No, you need to clear your break, whatever you're getting in. And remaining shares, settlement, the middle office and desk, they will work on that to settle those trade. When that trade settle, you will match those instructions when you're getting the statement from the clearing agent. That's how it works in the trade settlement. It's not very complicated. The only thing is that you need to focus on the details, what exactly ledger you have and what statement you are getting from the clearing exchange. Never ever match two different trade. Don't. mismatch to clear your break. It's not a good practice. It will create a lot of issues for the different team. It will create an issue in the P&L, and it might get escalated to management when they found out about the mismatch. So don't match any wrong entries just to clear your break. Reconciliation plays a very important role sometimes. If the trades get auto matched, you need to figure out and to clear those auto match and match with the correct entries. It's very important to understand the role of reconciliation. When the trade is reconciled, and from the reconciliation point of view, you are thinking like, okay, now reconciliation is done. Trade, I matched 100 share with the statement. I didn't check whether that statement belongs to you or not. You didn't check, and you thought, okay, 100 share, I send everything is matching, trade value matching, let's match it, clear it. You know what will happen? And the P&L, it will break. P&L will hit if that statement and if ledger is not matched. Could be possibility that trade did settle in the market, but you got the ledger due to multiple reasons. Could be a system issue, or it was manually settled in your internal system, so you got a state ledger, but trade never settled on the exchange, so you never received the statement for the actual trade. But when the next day it was manually closed in the system, so you received the ledger and you saw some other trade statement and you matched it. This trade is closed in the system, but it never settled in the market. So when it never settled in the market, it's going to impact the P&L, because desk knows that 100 was sold out, but in actual scenario, it was never sold out in the market. It was manually closed due to some error, or by fat finger, it was closed in the internal system. Trade never went out to the clearing broker, it never settled, but you cleared the ledger with the wrong statement. And the statement which was supposed to get matched with the different ledger which actually settled, and it never get matched with the actual statement, that will impact the P&L. Trade will open in the P&L and they will always reflect as that trade never settled. So imagine you are creating an issue for both the trade, one which was never settled, one which was settled but never get matched with the correct statement. That will create a break for P&L. Now, at some point of time, definitely someone will figure out in P&L if it is breaking. People will start reconciling from their end. PC will start looking out for the reasons that what happened, why it's breaking in the P&L, and desk will definitely know at some point of time, because counterpart will reach out to them. They'll ask them like, this trade never settled. Then how reconciliation get impacted because of incorrect matching. So always make sure that you are matching the correct trade with their own ledger and statement. Now, this was my trade recon topic. I hope this will help you. If you have any questions, just comment. I'll try to explain in a different way. Next video will be on the, as I promised, custody recon. I'll try to explain you how normally the custody reconciliation work. I'll try to cover the custody settlement in my next video, so that you'll get an idea that how does it work. It's a little bit different world. It's not too different. All the activities are almost similar, but the thing is only a couple of parties are involved. So you're thinking from a different way, not from the counterpart, not from your side. You're thinking from a custody as a middleman person, and you need to focus on both the parties. So that's the thing. You need to think from the both way, and you have to explain. You need to think about the trades, that how it run in the custody recon. I hope you learned something, and if you have anything, just comment. I'm going to um, ex- post a new video in like in Hindi, so that I know like a couple of people, they are looking for a couple of videos and they actually understand if you explain them in Hindi, and they can understand the process. It's not necessary that everyone will like they are very good in learning in English. Sometimes Hindi make them comfortable and they can understand the thing. So I hope this will help everyone. So if you are interested, you can watch those videos. It's totally free, and I'm just waiting for my next. I'm going to plan if I complete 500 subscriber, I'm going to have a online live session so that I can answer some queries and some question if I know. Definitely, if I know, definitely I'll answer that. So let's see. When I have my 500 subscriber, I'll go online and live. Thank you so much. Have a good night.